Welcome along tonight, guys. My name is Nick Thompson, and this is the How to Maximize the Tax Benefits of Your Network Marketing Business Masterclass. We're going to go through a lot of info tonight, but basically my goal for tonight is to show you how to unlock hundreds, or in most cases, thousands of dollars of unclaimed tax refunds. But more importantly, I'm going to show you how to avoid the most common financial mistakes that I see most network marketers are making. But I won't leave you there. I'll also show you how to avoid those mistakes as well. So this training is this training for you? It's a good question. So this is for you if you've just started network marketing part-time. It's for you if you've been doing network marketing for a while. This is for you if you only do network marketing. And this is for you if you do network marketing alongside your job or other business. So pretty much for everyone. This is definitely for you if you've been in network marketing a while and you haven't filed any tax returns for your business yet. And the next thing is, why is this training different? Well, I'm not gonna overwhelm or bore you with technical jargon like most other accountants do. This content is probably not content that you've ever seen before, and if you have, it likely wasn't explained in a way that didn't confuse you. What I'm going to show you is not just how to stay compliant with the tax department, but I'm going to show you how to maximize all the benefits available to you as a business owner. And more importantly, this training is different because you're actually going to walk away with step-by-step instructions on how to convert all of those benefits into real cash in your bank. So I have 3 specific goals for this training. Number 1, I'll show you what you need to do to maximize the tax benefits of your business. To teach you the 5 common financial mistakes most network marketers are making and how to avoid all 5. And number 3, I'll show you how to unlock those benefits, convert them into cash, even if you've been in network marketing for years and you haven't claimed any of them. So guys, this training is meant to be interactive. If you need clarity or anything that's covered, or if you're looking for more information, I'll respond to all your questions at the end. So please ask them using the Q&A tab, features tab, in your options. All right, so we're going to move pretty quickly through the information. There's a lot of stuff to cover in a short space of time. So stay focused through this training. I know how transformational this information is going to be. So you probably got your mobile phone in your hand. You've probably got Facebook tab open as well. So either way, I don't want you to get distracted. So do yourself a favor and stay focused and for this next 45 minutes. Okay, so who the heck am I and why should you care? So my name is Nick Thompson and I'm on the mission to raise the professionalism of the network marketing industry. The reason I'm so passionate about network marketing is because I once was a network marketer, just like you. Except when I started network marketing back in 2006, I was fresh out of accounting school. So I had that knowledge of what to do. I immediately applied what I'd learned to become an accountant in setting up and running my business. And all of that setup and ongoing practices that I was doing allowed me to qualify for a huge tax refund. I pretty much just took what I was doing for granted. I thought everyone had an accountant. And when I told my teammates about my refund, they asked me if they could help. And that's pretty much how it all started. So that was 12 years ago now. It's hard to believe so much time's gone by. And for most of that time, my wife and I, we worked together in 2 different companies while I did accounting for network marketers on the side. And that was until 2007 when something happened that had never happened before. Okay, 16 of my clients, they got their accounts reviewed by the tax department. Now this was very unusual because prior to that, I'd only had 1 client ever reviewed in the previous 10 years. And during that process of representing these clients, with the ID, I discovered 2 things. Number 1 is the tax department here in New Zealand right now are looking really closely at network marketing. which is a good thing. It means that the industry is growing, so the number of people filing returns in this industry must be increasing. And number two, our tax department doesn't really understand network marketing, not quite the same as they do a traditional business. So after a lot of meetings, explaining the business model and drawing out the compensation plans in RD boardrooms, I realized that the industry was missing an advocate. So that was someone from the accounting profession who could be like a bridge for network marketers, those that had the desire to build a business and build that bridge between them and the IRD and partner with someone who really understood the industry. So it was at that point that I decided to go all in and serve the industry with the tax and advisory services that it needs, because right now you're probably really confused, probably overwhelmed, maybe a little worried about the money you've made so far and the tax implications of that. And you don't need to worry. You're probably getting mixed messages from your team and your upline and very little direction from your company with what to do about taxes. You want to be free of the burden, and you want someone who just understands your business with the confidence to know that it's taken care of with as little fuss as possible. So here's a quick snapshot of just some recent results I've got for my clients. Sione, in my first year of business, I got a $2,433.60 tax refund. I was stoked. Lee, I was so surprised when I received an $1,123.79 tax refund for my first year in network marketing. And Van, I had worried and stressed about owing so much in tax in my first year in network marketing. After engaging with network marketing accountants, my worry turned to joy when they told me I had a $1,997 refund owing to me. So classic story. So bottom line is in your first network marketing, you most likely get a tax refund. So what I want you to think about for a moment is, what would it mean if you could have an extra $1,000, maybe $2,000 bonus coming in at this stage of your business? What could you invest that in to move yourself forward in the business? What if you could pay off your credit card from expenses that you've racked up to get to this place that you are right now? How awesome would it be if you could get enough back to pay for your own product consumption for the next 6 months? And what if you could receive that refund with minimal effort on your part? What if you could eliminate the hassle and stress when it comes to dealing with the tax department? And most importantly, what would it mean if you had a financial partner that has your back and understands the industry? Does that sound cool? All right. So let's quickly recap the agenda before we get started. Number one is I'm going to cover how to maximize the tax benefits of your network marketing business. Number two, the financial mistakes every network marketer is making and how to avoid them. And number three, how to unlock hundreds, maybe even thousands of dollars of unclaimed tax refunds. So that's my promise to you guys. I will absolutely deliver on that. Does that sound cool? All right. One last thing though, before we dive in, because I have mentioned specific results and numbers already on this training, and I'll be referencing more numbers and examples as we go. So any examples and figures I do quote are just that, they're examples. They're not a guarantee that you'll receive those same results. And in the case where I quote someone's actual refund results, this is no guarantee either. Please note that your actual refund or tax to pay will be dependent on your individual circumstance, and that nothing I say tonight should be regarded as specific financial advice without first consulting with either myself or another accounting professional. Basically, guys, if you act on any information received in this training without consulting with us or anyone in our team, then we cannot be held liable for any results, negative or positive, from the misapplication of the information. So with one exception, except when I give you specific instructions to act on things, for example, opening a bank account, filling in a form, that sort of thing. Okay, so is that all clear? All right, well, with that being said, let's dive straight in with secret number one, how to maximize the tax benefits of your network marketing business. So the question that is floating around in the heads of most distributors is this: what do I do about the whole tax thing? Okay, should I file a tax return? Do I need to file a tax return? When do I file a tax return? And that's, there's a lot of misinformation going around. Like, I don't need to do anything until I've made a certain amount. I hear that a lot. You don't need to do anything until you've made a profit. That's a common one. And commonly what people are wondering as well is, will I get stung with secondary tax? That's another misconception. So the good news is I'm going to clear up all of those misconceptions here tonight. And so let's deal with the secondary tax question first, because this is super easy. So no, you will not get stung with secondary tax. This is a total myth. Secondary tax only applies to income earned from secondary employment. Okay, network marketing is not a job, it's a business, and so therefore subject to business income tax, and also opens you up to a whole host of tax advantages. But what about the whole, should I file a tax return? Do I need to file a tax return? That's those sorts of questions. Those questions really don't have a straightforward answer. So let me break that down for you. Let's start with the, do I need to file a tax return? So the answer to this is, that depends on whether your business is a business or a hobby. Okay. So it depends whether the specific network marketing activity that you're doing would be considered by the tax department to be in business for tax purposes, and I'll break that down and what that means in a moment, or whether it's considered to be a hobby. So if your network marketing activity does not meet the criteria for being in business for tax purposes, it is considered to be a hobby, and you do not need to file a tax return or declare any income received. However, if ever, you will not be able to claim deductions for the expenses incurred in earning the income. Okay, so now what does it mean to be in business for tax purposes? What does this all mean? So this simply means that your whole intention is to move your business forward and towards the point of making a profit. Okay, now notice I didn't say that your business has to be in profit, just that your intention is to reach the point of making a profit. And I'll cover that exact criteria that you need to meet in a moment, but for now, I just wanted you to get the concept first. So provided your intention is to make a profit and you're meeting that criteria to be in business, let's deal with, should you file a tax return? Well, the answer is absolutely you should. And why is that? Well, because of this magic word called deductions. I'll cover this in a moment. But the ID will allow you to legitimately claim deductions for the business expenses that you incur in earning business income. And the cool thing is that you can make almost any expense deductible given the right circumstance. So how is that possible? Well, it's really because of how the tax law works. Okay, so the tax laws are written in favor of business owners, because generally business owners are the ones that are putting money back into the economy, and they produce rather than consume. So generally, the general rule is, as long as the expense has the purpose to produce more income, it can be deductible. And lastly, when should you file a tax return? Well, as soon as possible. Why is that? Because generally at the beginning of any new business, that is when your income is the lowest and your expenses are the highest, which means one beautiful thing, and that is tax losses. Okay, we love tax losses. They mean no tax to pay, and even better, they can be offset against your current or your future income, which means more money in your pocket. But for now, that's it for that first point. Let's quickly recap. Will you get stuck with secondary tax? No, you won't. Do you need to file a tax return? It depends on whether you're in business. Okay, a little hint, you want to be in business so you can get those deductions. Should you file a tax return? Absolutely. When should you file? As soon as possible. Why is that? Because tax losses equal refunds. Okay, all right. Let's move on to the second point that I want to make about the advantages of a network marketing business. Okay, so the tax advantages of a network marketing business are no different to any other type of business, okay? Except that you don't have all the same risks as traditional business, which actually makes it even better. Okay, so for an example, let's just go through an example. If you earn $5,000 of commissions in your first year of business, and your business expenses were $5,000, your profit would be zero. Therefore, your tax to pay would be zero. Okay, that's pretty cool. This is a pretty typical scenario for most first year network marketers. Okay, so that could straight away just eliminate any sort of stress or hassle or worry. You could kind of say, well, if you have earned under $5,000, you can pretty much guarantee you wouldn't have any tax to pay on that, because to be able to rack up $5,000 in tax deductions is pretty easy. Okay, the average amount of tax deductions that I see people being able to deduct each year is somewhere around $7,000 or $8,000. Okay, so but here's another scenario which is even cooler. What if in your first year of business you were able to deduct more business expenses than you had income? What would happen then? So let's say, for example, you made $5,000 in commissions again in your first year, but you have $10,000 of business expenses. If this was the case, you'd have a loss of $5,000. Okay, but hang on a minute. I know you might be thinking, I've made a loss. Does this mean I've lost money? Well, no, not necessarily. Okay, so how's that possible? Well, as a network marketer operating their business from home, a portion of your ordinary home expenses can be treated as a business expense. Okay, so in the last section of this whole training, I'll go through how to set up your home business office and what to do to claim those business related expenses. But just for now, I want you to get the concept at this stage. So get this, a lot of the expenses you're able to deduct in network marketing are expenses you already have anyway. Okay, I'll say that again. A lot of the expenses you're able to deduct in network marketing are expenses you would have anyway. So simply by starting a network marketing business and operating it in a way that means you're in business for tax purposes, then boom, you got instant tax benefits. All right. That portion of your ordinary living costs that you would have been paying for anyway can be offset against your business income. And here's where it can actually get even more exciting. If you are currently working and say you're earning wages or salaries, then the tax department will allow you to offset that loss against your employment income. Okay, which means a tax refund for you. Okay, that's how it works. And if you are in a reasonable paying job, like let's say you're in the higher tax bracket, that could mean as much as 33% of all of those tax losses, they come back to you in the form of a refund. Now, you don't need to get bogged down in understanding how exactly all that works. Just know that it does, and that this is the case for a lot of first-year network marketers. So what if you're already in your first or in your second or your third year in business? Well, a lot of people, they come to me asking this question and wondering if there's something that they can do, whether it's too late. If this is you, then it's no problem. We can definitely backtrack into previous years. So the last point that I wanted to cover in this section is what is this exact criteria for that you need to meet in order to be in business and be able to receive those benefits. Okay, so this is really what I want to leave you with in this section is what is this whole criteria? What do I need to do to meet it? Well, you have to pass what we call the business test. It's the all-important test which will determine whether your network marketing business is considered to be in business for tax purposes or whether it is considered to be a hobby. So generally, you're in business when you start charging others for the goods and services you provide. the goods and services, you do that on a regular basis, and you intend to make a profit from doing so. So that's the general description of being in business. Now, how to decide whether you're in business for tax purposes, the tax department here will look at these 6 different areas: the nature of your activity, how much you make from that activity, how much time, money, and effort you put into the activity, how long you've been doing the activity and your future plans for the activity, whether you run your activity in a similar way to most businesses in the same industry, and if you intend to make a profit. So what I want to leave you with in this section are the 5 things that you must do in order to pass this business test. This is what I've boiled it down to, these 5 specific things. So here we go. Number 1. The first thing you can do is you could be on auto ship for your company's product or service, or the equivalent membership that your company offers. Okay, so whatever it is that your company requires you to do if you wish to participate in their compensation plan. All right, this very act signals your intention to earn an income and eventually make a profit, especially if your participation in this membership or auto ship program is required for you to earn an income. Okay, but that's not enough. We need to do number 2, which is putting in regular and consistent effort into the business. Now, this could look like attending company-run events, associate-run events, meetings with prospects at their home or cafes to share the product or services, training your team, online or offline trainings or marketing efforts, those sorts of things. And there's not really any magic number of hours or written in stone that's acceptable, but I would say at least 10 hours a week putting into your business if you were just starting out, doing it alongside your full-time job. All right, number 3 is have separate business bank accounts. Having these separate business bank accounts for your business is one way that communicates your intention to run a business in a profitable manner. If you haven't done this already, I definitely recommend setting up the business bank accounts for your business right away. Number 4 is be working with an accountant. Now, I know this might sound a little bit self-serving, but every real business has an accountant, whether that be with me or with someone else. It's definitely a must. A good accountant who understands your business will help you navigate the potential pitfalls of being in business and save you money on your taxes. And number 5, if you did this one, have a basic business plan. This is most likely the most important one, as it satisfies a lot of the points that the IRD look for. And I see too many businesses, just network marketers, just winging it in their business. Okay, a lack of a business plan, it really results in a high failure rate, less than satisfactory results, and ultimately damages the reputation of the entire industry. So a basic business plan should state the nature of the business activity, how much you make from that activity. It should state your goals, especially knowing your break-even point, which is the point where you start making a profit, how many customers you need to reach your goals, and finally, the marketing strategies you intend on mastering in order to acquire those customers. So having a business plan in place and knowing this will definitely increase your likelihood of making a profit. I'll cover more in detail about this business plan in the next section and give you some guidelines as well on how to set up your business bank accounts if you haven't done so. But that, my friends, is how to maximize the tax benefits of your network marketing business. The key takeaways for this section are definitely those 5 things that you must do in order to pass the business test. Those 5 things again were: enroll in your company's auto ship, put in regular consistent effort in your business, setting up a business bank account, and putting in place good basic bookkeeping and record keeping practices, work with an accountant, and have a business plan. Okay, that's it for secret number 1. Let's move on to number 2. So this is the 5 financial mistakes that I see every network marketer is making and how to avoid them. So over the last 12 years, I've worked with a lot of network marketers, and I see them making these 5 mistakes, and they're having a massively detrimental effect on the success of their business. And I think generally these mistakes have been adopted because network marketers simply don't get taught how to manage the financial side of their business by their company or their upline. Unless you've had prior business experience, which most network marketers have not, you need to understand that the success and failure of any network marketing business can almost entirely be determined by whether the financial side of their business is managed properly. So come with me as I teach you these 5 financial mistakes that could be preventing you from reaching your potential in network marketing. So mistake number 1, and that is not filing a tax return in your first year. Now, I think I've fairly much covered this one in the first section of this training. If you are meeting the tax department's requirements of being in business for tax purposes, then it is a huge mistake not to file a tax return in your first year. That's typically when the income your income is the lowest, your expenses are highest. So it's your best chance to get a big refund, which you can invest straight back in your business. So I'll use my case as an example. When I first started network marketing, I went to all the company trainings. I invested in personal coaching, attended personal development events to help my skill set. I traveled a lot to attend these trainings. I attended as many network marketing or networking opportunities as I could and practiced my skills. And by the time I added up all the money I'd spent sampling and marketing my company's products, the mobile phone bills, a portion of my vehicle costs, home office expenses, that sort of thing. By the time I added all that up, I had over $24,000 of deductible expenses. Okay. Remember, I knew exactly what I was doing in that first year. So I was making the most of everything. Now, I wasn't very good in my first year in network marketing. I just made just over $3,000 in commissions. So that meant on paper, I'd made a $21,000 tax loss. And as I mentioned before, our tax department allows us to offset that tax loss against our other income, like wages or salaries. So in that year from my job, I made $45,000. So offsetting that $21,000 tax loss from my business meant that my actual income for the year was $24,000. And because I'd already paid tax to the IRD on the $45,000 from my job, when I submitted my return, basically where my refund comes from is really the tax department refunding me the difference between the tax I'd already paid and the tax that I should have paid once I'd taken into account those losses. And that refund was $3,675. And that was enough to maintain my auto ship for the next 2 years. So that was pretty awesome. These results are definitely not typical. Sometimes it can be much more, especially for higher salary earners. In fact, the largest refund that I've helped someone receive is over $20,000. So that just goes to show you what's possible. But my message for you tonight is this: if you run your business as a business, you too can make legitimate tax deductions and offset them against your income. Okay, as long as you run your business as a business and not a hobby, and you maintain good accounting practices, then this is what I've seen. 87% of network marketers I talk to qualify for a tax refund in their first year with an average refund size of $1,597.13. Okay, based off actual figures, actual numbers from the hundreds of network marketers I've helped over the years. All right, mistake number 2, not setting up your business early enough. Okay, so the first thing that I did when I started my network marketing business was I set up separate business bank account, and I ordered a separate business card, the Visa debit card for that business. If this is not done from the beginning, then it makes it really hard to keep track of all your business expenses. And so therefore, it reduces the amount of deductions you can make. Okay, so to open a business bank account, all you've got to do is call your bank and ask them to do it. All right, if you're running your business in a partnership or in a company, you need to register a name and a tax number first. But if you're just starting out, you don't need to register a business name or anything official like that. All you need to do is tell the bank that you are operating as a sole trader under your own name. Now, when you call, you want to ask for 2 accounts to be made, and you want to order that debit card for one of the accounts as well. One account will be called your business transaction account, and you'll use that account for all your money in and out business transactions. Okay, you will arrange to have your commission checks paid into this account, and you arranged for your company's ordership, product or service to be paid for using that new business card, which will come out of this account. And now you just need to know what expenses are deductible and what aren't, so you know when to use your business card and when to use your personal card. Now, I'll cover that more in the next mistake, but that second account that you create is basically going to be your tax savings account, which you'll have there as like a holding account for such time as you need to start putting away money for tax. Now, if your business is not making enough money to cover all the expenses that you have in the business just yet, then what you do is you simply transfer money from your personal funds into the business account. And vice versa, if your business account is starting to build up the business income and you need to draw money for personal expenses, simply draw the funds out. This way you're keeping a track of your movement of personal funds in and out of the business, which is a good habit to get into, especially down the road if you move into a company structure. Now, if you are building your business together with a partner, then it's best to set things up in a partnership so you can legitimately separate those expenses to each of you. So how to structure that best for tax purposes will definitely depend on your personal situation. So if you're building your business with a partner or you have any other investment or business income, definitely please contact us for a consultation to discuss the most tax efficient way of structuring that. All right, mistake number 3 is not knowing what expenses to deduct and how to make them deductible. So with a network marketing business, almost any expense can be deductible given the right circumstances, right? So from the beginning of my network marketing business, when I first set out, I made sure that I could deduct as many expenses as I could. 2 of my favorite expenses that I love to, favorite things that I love to do is eat and travel. So I found a way to make most of my traveling and eating a legitimate tax deduction. So how did I do that? Well, whenever and wherever there was a company event, I took the opportunity to go. So just the travel alone for me to go to those events was tax deductible. Now, not only would I get the training to build my business, but sometimes I would tack a personal holiday on the back of that event. Now, let's say, for example, that event was in America and my flights to America would have cost me the same to go there and back, no matter whether I stayed there for 3 days for the event or whether I had stayed there for 3 weeks. I could still claim the entire deduction for those flights because it wouldn't have meant any more. Okay, I wouldn't have been able to claim all of the expenses that I could, but you can claim everyone that's deductible, like the ones that you incur during that event, but anything outside of that, accommodation, food costs outside of that were personal, but the travel cost to get there was fully deductible. Anytime that I'd go out for food or drink, no matter where it was, I'd always make sure I was with a prospect. So if I was going out for lunch, I'd make sure it was with a prospect, with a team member, or a business partner so I could make that eating out fully or partially deductible. So the general rule is, as long as the purpose of the expense is to produce more income, it can be deductible. Okay, so this is, here we go. Another one of my favorite deductions to make was for vehicle, phone, and home office expenses. Okay, so provided that you keep the proper documentation, you can deduct a portion of your transport, your phone, and your living costs. And the best part was that the majority of these deductions were from expenses that I had anyway, as I've already said. So as long as you remember this golden rule, that there must be a business purpose for the expense, and as long as the expense can be shown to produce more income, it can be deductible. Okay, so that's financial mistake number 3 and how to avoid it. Number 4, not having specific goals and a plan to get there. All right, this is going to be gold, guys. This is going to be worth the cost of the admission right here. So listen in. So in business, knowing your goals is a massive step forward. And we're taught this a lot in network marketing, aren't we? We're taught to aim high, think big. I can remember when I first started network marketing, I was overly ambitious with my goals at the beginning of my journey. And that was until I learned how to develop an effective plan to achieve my goals. So here's my outline for an effective business plan. Okay, let's break this down. So first thing you need to know is you need to know how much you make from a typical sale of your, like a typical starter pack in your company. So do you have a fast start bonus? Do you make like a product introductory bonus? That sort of thing from selling a typical starter pack in your company. You need to know that. Secondly is, what is your goal? How much do you need to make each week from your business to meet your goals? Then you need to know how many enrollments you need on that typical company starter pack to reach your goals. Okay. So then you need to know how many people you need to show your product or service or opportunity to in order to acquire that many customers. Then you need to know, so let's say that could be 1 in 10. Like 1 in 10 is a good ratio, nice and conservative. Then you need to know how many people do you need to contact in order to have one of those people take a look. So this could be something like 1 in 6. Maybe you need to have 1 in 6 contacts, and out of that, 1 of them will want to take a look, and then out of those people that take a look, 1 in 10 will become a customer. So if you need to make 600 a week, and you make, let's say for example 200 from the sale of a typical starter pack, then you need 3 customers per week, right? So if you need to show 10 people to get 1 to enroll, then you need to show 30 people to get 3 customers. Okay. Now, if you need to show 10 people to get 1, but if it takes 6 people to contact before you get 1 person to take a look, then you need a total of 180 contacts each week. So this means if you're not generating at least 180 leads or connecting with 180 new contacts each week in order to have enough people to present to, then you just cannot reach your goal. So if you're not prepared to do that level of activity, or you just don't have the time, then you need to adjust your goal and adjust your expectations. But if you do have the time, then the question becomes, how do I generate that many contacts, and what strategies am I going to master in order to do so? Okay, so that's how to break down a basic business plan. If you've got that and you're following that each week, and you know your numbers, then you have to hit your goals. And I see a lot of people not having that clarity on that and not really focusing in on that. So I hope you got some value from that one. All right, lastly, let's have a look at mistake number 5, and that's not investing money into marketing. All right, this has to be the biggest mistake of them all and it's something I failed to do for a long time. I realized that all successful businesses invest in marketing, and network marketing business is no exception. So after following your company's foundational business training and working through your initial warm market, you must put a plan in place to create a steady stream of leads. Okay, that could be people to talk to about either your products or your opportunity. And it could be done either through online or offline methods or a combination of both. And depending on the strategy that you choose, may require some investment as well. Okay, so one key to building a strong network marketing business is also to build a personal brand. And the primary way that I see most network marketers do this is by choosing a niche, something that is interest to you, and attracting like-minded people through social media and content marketing. This approach builds your credibility in an area you're passionate about, and it feels authentic. Say, for example, I saw this one lady, she was doing it and she loved this particular breed of dog. Okay, totally random, totally, completely not even related to her network marketing opportunity, but she loved this breed of dog. And so she joined all the groups on social media that were with other people that loved that dog, and she had her own group that she created as well. Another one I've seen is a guy that had loved this particular model of car. I bet there's a group on Facebook specifically for any niche that you choose, and if there's not, you want to go out and create one yourself. Okay, when you do and you pick that niche, you want to add these people to your network. Okay, build relationships with these people because they're like-minded. They'll see your profile and see you're into the same things and naturally want to get to know you. So now when you do your next marketing campaign, you're going to have increased your network and you'll have more eyeballs on your next product or opportunity promo. So this approach is a long-term play. So you need to manage your expectations around this one. One strategy that I used when I first started, or a while after I first started, was I used direct marketing through LinkedIn. So what I did was I identified the characteristics of my ideal business partner, and I began connecting with people like that through LinkedIn messaging. You can also do this on Facebook as well. There's some great search features on Facebook and on LinkedIn that can be quite specific about the type of person and their interests. So what I did was I had a standard greeting message that I would send, that it had a few follow-up questions after that to find out if they were open to opportunities. And over time, I found out what messages were getting the best reply and results. So I systemized it, and then I outsourced that step to a virtual assistant from Indonesia. And over time, I had a steady stream of qualified leads coming in to talk to. So I totally outsourced that first step, giving me a whole bunch more time. So I recommend implementing something like this once you feel more confident with talking to people, and definitely after you've practiced on your warm market. But to not implement this step is a huge mistake that I see network marketers making, especially when your warm market starts to dry up. You just won't be able to sponsor at the same rate that you did at the start if you don't start adding to your network in some way. So that is the 5 mistakes that I see most network marketers making and how to avoid them. Okay, guys, secret number 3. This is really where we bring it all together. How to unlock hundreds, maybe even thousands of dollars in unclaimed tax refunds. So depending on the timing of you listening to this training, and as of this recording, it is the 17th of March, 2020. So it's just about 2 weeks from the end of the financial year, the 2020 financial year. If you started your business anytime between the 1st of April 2019 and the 31st of March coming up in 2020. In this next segment, I'm going to give you the specific instructions on what you need to do and how you need to go about completing your tax return and unlocking any potential tax refunds. These steps, they also apply to anyone listening to this who's started their business prior to the 1st of April 2019 as well. That means if you've been in business for a few years, 2, maybe 3, sometimes even 4 years, depends on how long you've been putting this off. Okay, so the only thing that will be different for you if you've been in business longer is that you'll just be preparing 2 or more summaries of accounts rather than just one. So, for example, if you are listening to a recording of this training and you've just started network marketing and it's after the 1st of April 2020, you don't need to worry about any of these steps until next year, when the next tax year ends after the 31st of March 2021. So if you're after the 1st of April 2020, listen to this. Just what you should do now is just put in place all of the good accounting practices that you've learned here, like the bank account setup, the business plan, practicing good account conduct, knowing what expenses are deductible and what's not, and good record keeping practices, that sort of thing. But for those who have been in network marketing for any length of time prior to the 1st of April 2020, or even in prior tax years, then this is what you need to do. Okay, number 1 is you need to get familiar with what expenses you can claim. There are a lot of them, and rather than me going through each individual one on this training, I prepared a downloadable cheat sheet called What Expenses You Can Claim that you can read through. So you can get hold of this either by emailing me. I'll put my email address up at the end, or down below this video, wherever it's hosted, you can download it from there. So I created this resource for you so you can know exactly what expenses you can claim for. And so rather than me running through each one of those individually on this training tonight, I think a better use of our time is actually to spend it covering this, and that is what you need to do in order to claim these expenses legitimately. Okay, so this is very important. That, remember, there must be a business purpose for the expense, and as long as that expense can be shown to produce more income, it can be deductible. So one of the first things you'll need is proof of the actual transaction. So the tax department here, they require 2 forms of evidence for each transaction. That is the bank statement line and a receipt for that transaction. And each statement and each receipt you must keep stored away for 7 years, even if you cease doing the business. Okay, so at any time in the next 7 years from now, the ID can go back and request this information. Now, if you haven't been keeping receipts up until now, and this is very, very common, so don't worry, you should be able to track down all of your major receipts from suppliers via email or by calling them. Usually you get emailed receipts these days. Like if you book some flights, you'll get a confirmation email. You probably are already getting emailed your phone bills and your power bills and things like that. And technically, you don't need a receipt for expenses under $50 anyway. So as long as it's on your bank statement, you can just go by what it says on the bank statement. But just as a matter of good habit, start keeping receipts no matter how big or small from now on. Okay, so the next thing you need is diary notes of your activities. So in our type of business, we meet people wherever we go, okay? And all of a sudden, your trip to the cafe could become a prospecting event. So for example, say you met someone while you were out and you end up chatting about your business or your products over a coffee, then that coffee can become tax deductible. But the problem is, how do you prove that that was a business meeting or whether it was just you grabbing a coffee? So you should keep a diary note of these activities from now on, all right? But chances are you haven't in the past. So to claim a deduction for an expense in the past, you need to just be mindful that in the event of a review or an audit of your accounts, you may be required to produce this evidence that the expenditure was business related. So if you can't, then the deduction will be disallowed. So going into the past, you can either make notes in your diary right now if the details of the meeting are fresh in your mind, or you could just not claim it at all this time round and just commit to keeping diary notes from now on. Another example where diary notes become important is in business related travel. Okay, let's just say that you're making a trip to visit a prospect and your primary motive is to share your business products. You should make a diary note of who you met, where, for what purpose, and for what outcome. Okay, so that was who you met, where you met, what was the purpose, and the outcome. Okay, it's best to use a diary app on your phone so it's always stored in the cloud, but whatever system works for you, just do it. So why do I recommend doing this? Okay, it seems like a lot of trouble to go through. Well, doing this will safeguard you in the case of an IRD audit or review. Remember my story from how IRD are looking closely at network marketing right now? Well, if the IRD seek to review or audit your accounts, without supporting evidence to back up certain expenditure you've claimed, the IRD could challenge the legitimacy of your expenditure and deny it. Okay? If you want the tax advantages, it brings with it the additional responsibility of proving it. Okay, so don't get slack in this area. Diary notes could actually make the difference between an expenditure being allowed or not, especially if IRD are looking into prior years, maybe 2, 3, or even 4 years in the past. All right, so let's move on to the next steps about claiming expenses and what to do, and that is to do with your home office and the business vehicle usage. Okay, so firstly, home office. So if you haven't already, you should set up a separate room in your house as a permanent office space in your business. So this could be a separate room in your house, maybe even a sunroom or part of your dining room, just as long as the space is dedicated permanently to the business. Okay. If you only rent a room in a house, like you're flatting or you're boarding, then what you want to do is set aside a permanent space in that room, enough space for a desk or chair and a shelf, and that's used exclusively for business, and call that your office. Okay, the next step is to sketch out your floor plan. So measure the dimensions of the whole house, including the garage if it's attached, and then measure the dedicated business space within your home. So that would look like this if you were renting or owning a whole house. If you were renting just a single room in a house, like a flatting situation, then sketch out your room showing the space that you use for business. So this proportion of space will be the business use percentage that we'll use to claim for expenses like mortgage interest or rent, rates, and other home expenses like insurances, internet, and that sort of thing. So now on top of that, you may also use other parts in your home for business. For example, the living room for sample parties or team trainings. So sketch that out as well and work out the proportion of business use. But when it comes to claiming this area, then you can only claim for the proportion of the number of days you use it for business, because it is a multi-purpose area. It's also an area you use personally as well. So for example, if you use that space 2 out of 7 days, then that area will be apportioned for that use. So add to your sketch the area used for meetings or trainings. Keep good diary notes of your activities to substantiate the business use of those mixed space areas as well. And finally, let's have a look at your motor vehicle. So if you use your private vehicle for business, you can claim deductions for business use. There are 2 methods you can use. That is the business use percentage or the mileage rate. So to claim a business use percentage, you must keep a car log recording the business use kilometers for a 3-month period. And that business use percentage can be set for up to 3 years, provided that use doesn't change by too much. Now, if you're going back in time, and that may be a little bit difficult because you can't keep a 3-month logbook for that period. So this may be something that you just have to do from now on and let it go for the prior years. That is, unless you could conservatively estimate your business travel. So one of those methods, remember, was the actual mileage rate. So at the moment, that's calculated at a specific rate per kilometer driven. That's 76 cents per K at the time of this recording. So let's just say that you consistently travel to an in-home meeting each week or to your company's head office for training each week, and you can accurately measure the distance via driving it one time to see, or even just on Google Maps, you could measure it, and you have a consistent frequency of travel. That could be one way that you could look back and calculate your actual business use for this time. Just make sure that for the future you keep a detailed car log for future tax years. All right, so that concludes what you must know in order to compile this summary of income and expenses that needs to be presented to an accountant to file a tax return and potentially unlock these tax refunds. So now what you must do is this. Number one, you need to open up a brand new Excel spreadsheet or Google Sheet. And you want to list in this spreadsheet, list each expense category that you're claiming down the first column. So in this example, rent, vehicle, travel, marketing, that sort of thing. You'll get a complete list of all the expenses in that sheet, which can be found either in a link below this video where it's hosted, or by emailing me to the address that I'll give you at the end. And in the next column, you want to write down the total amount spent on each of those business expense categories. So yes, this is going to mean that you'll need to work through your bank accounts and your receipts, adding up all the expenses. But as you've seen, this is totally worth it. And I've got a couple of little time hacks here to make this process easier. If you've been doing a good job in keeping your receipts, and you know that you've got receipts for everything that is on your bank statements, and you could confidently produce the evidence from those if you needed to, then what you should do, what you can do, is just use the bank account or the bank statements to find the expenses. Now, if you haven't been good with keeping receipts and record keeping, then as you're working your way through your bank statements, ask yourself this question. Okay, if I had to produce the receipt, could I? Meaning that if at some point you got audited and you had to provide a receipt, could you call your power company and ask for a statement? Could you call your phone company and ask for a statement? Could you ring the airline and get an invoice emailed to you? If the answer is yes, then just use the total on your bank statement for now. Also, most expenses get emailed to you these days, usually the big ones. So they're the ones that make the biggest difference in the long run anyway. It's really going to be only those smaller ones that you may need to not claim this time round and just be better at keeping records going forward. But remember, you don't technically need a receipt for expenses under $50 as well. So if it's on your bank statement and it's less than $50, you can include it in your summary. So if you're a bit tech savvy, you can also try this, all right? Export your bank statements from your internet banking to an Excel spreadsheet and create your own coding system for each expense category. So as you work through each expense and you're going through your bank statements, put a category name next to each expense. For example, if you're going through your bank statement and you see rent coming out, you write in a blank column next to that, rent, right? Power, entertainment, petrol, anything like that that comes up that you can recognize is a certain business expense. And then what you do, if you know about this and you know how to use the sort feature on a spreadsheet, that will sort everything in that column alphabetically. So it'll group all of those self-coded expenses together so you can easily just highlight that block of expenses and add it up. So that will totally make sense if you are someone that's familiar with Excel. If not, then just you could always Google how do you use the sort feature in an Excel spreadsheet, and you'll be able to find out. All right, now once you've done that, then you want to transfer those expense totals to that summary of expenses that you started creating. Make sure that you add in the business income too, and at the bottom of that, add in your home office use percentage and your vehicle use percentages for me as well, and you're all good to go. So there you have it, guys. That is exactly what you need to do step by step in order to prepare your income and expense summary sheet to send to me to be processed and find out if you're owed any tax refunds. And that concludes the training, guys. That is the 3 things that I want to cover. Right now, I want to open it up for any Q&A time. So this is your chance, guys. If there's anything, any questions that you wanted to clarify about anything at all, then just chuck that into that Q&A field there, and I'll just sit here waiting for those to come in. Let me just pull that up so I can see it. And just while I'm waiting for, if someone's just typing now, while I'm waiting, usually what I get asked is what is my fees. This usually comes up, so let me just cover that right now. So how much is my fee? That's good England, is it? Okay, how much is my fee? So this is how it works. I break it down into 2 components. The first component is the processing time. So this simply means this is an hourly rate that I have for taking the information you present to me and turning that into a set of financial statements. So this means that the more time and the more detailed you can be and the cleaner your summary is that you present to me, the less time this is going to take. And also the less back and forth and emailing it's going to take for me to finally get all the information I need to do it. So the more you can include in there and the cleaner it is, the less time it takes, the less it costs. Then I have a fixed filing fee of $250. That is to file your IR3, your individual tax return, and financial records. Now, this is just purely as an example. An average job will usually come to between $425 and $600, and it's totally dependent on the work to need to be put in, but that should give you a rough idea. And that fee is completely tax deductible as well, and in most cases is covered, well and truly covered by any tax refunds that are owing. Of course, this is also dependent on other work done, other income streams that you may have, other business interests or property that you may have in the mix as well, which will be additional to that. Okay, I'm not seeing any questions coming through, which is cool. It means I must have done my job fairly well tonight. Hope you guys got a lot of value out of that. Oh, here goes something. Cool. Brendan asks, thanks for the value info. Definitely answered questions we have for this tax year, so highlight what we need to work on. Okay, very good, guys. Glad that that was of use. So finally, just wrapping up, this is how you get started. If you want to engage with me as your accountant, flick me an email at nick@homebusinessaccountants.co.nz. Okay, that's nick@homebusinessaccountants.co.nz. And if you want to request any of the info sheets that I've mentioned during the training tonight, then go ahead and put those in your email and request those. And that is it. Thanks so much, guys, for logging on. It's a pleasure to be able to present that to you tonight, and enjoy the rest of your evening.